So kind of the basics for title is, even some of my friends that aren't in the business, I explain to them the Title 101 speech. Title companies are insurance agencies. You're either small, you're medium, you're large, or you're gigantic. I have been all four of them, right? So you have to wave a flag, as I call it, an underwriter, right? So if you're a property and casualty person, you work for a State Farm, American Family, AIG, that kind of company, you're writing insurance for a future risk. Am I going to get hurt on the job? Or are my people going to get hurt on the job? Am I going to die? That's life insurance. Auto insurance, the risk that my kid, knock on wood, gets in a car wreck. Title insurance is the absolute opposite of that. So a title company does their research going back in time, X number of years, depending on the state and the county. And then we make sure there's no back taxes, there's no liens, and there's no judgments. So if I kind of break that down, if there's no back taxes, okay, maybe you owe taxes to the city, to the state, or I hope not to the IRS, right? When you get a lien on your property, that means you got in a fight with the roofer, and in the form of a lawsuit, they put a lien on your property. So when we do the research, by doing the research on your house, and if you have got a lien on there, that means you cannot refinance your house, you cannot sell your house. And no way do I want to buy your house with that lien on title, because it's an unpaid bill, is what it is. It's a bar tab that's open that you have to pay.
If you or someone you know owns an apartment community, listen up. Storyboard Living is actively seeking 40 to 250 unit apartment communities within a 3-hour drive of St. Louis, whether that's Carbondale, Illinois, Columbia, Missouri, or St. Louis County. We're easy to work with and competitive on pricing. You can send information to deals@storyboardliving.com. That's deals@storyboardliving.com. Brian, thanks for taking the time.
Great. Thank you for having me.
I appreciate you making the trip. You're the Vice President of National Commercial Services for the largest title company in the Midwest, ATA National Title Group. You have 450 people on your team, 60 offices, and you serve 50 states. I'm reading all of this off because there's just so many impressive points here that I want to make sure I hit. ATA is ranked in the top percentage nationwide in terms of volume for 6 title insurance underwriting. And what are those big 6, by the way?
So first off, the company that created title insurance is First American. Everybody knows First American and loves them, and I've repped them for over 20 years. You have Fidelity, you have Stewart, you have WFG. Chicago's part of Fidelity. So technically we have about 8 or 9, but the big 6 are the ones that most commercial folks are aware of every single day. Yeah.
Got it. And you have 22 years of experience in the industry. So I'm excited for this conversation. I think you're going to add a lot of value to any listeners who are involved in any sort of real estate transactions. Before we really jump into the exciting world of title, which
Good luck with that. Yeah.
which I think it is very exciting, based on the various deals and moving pieces. But before we jump into that, can you give some quick background on where you're from, how you grew up, and if you had exposure to real estate or business before entering the business you're currently in?
Yeah. Well, for starters, thanks for having me. Really appreciate being on your podcast. I know title's not the most exciting industry. For me, it's all about relationships, but born and raised in Kansas City on the Missouri side. I'm the youngest of 4 boys, so I'm a little bit scrappy. My brothers were 5, 6, and 8 years older, and grew up outside of Raytown, so South Kansas City. And then ended up going to Mizzou, very cliche Missouri story, where I met my wife. So Heather and I have been together since October 10th of 92. Blind date, hayride with my fraternity, and we've got 2 kids. So Miles is 18. He's a senior in high school here in St. Louis and is getting ready to go to college, and just chose his college, chose the roommate. So we're going into that almost empty nester phase of our life. And then Emma's 24. Finished Mizzou, came back, and she's working with nonverbal autistic children. And we've always known that she would be in that space. So that's kind of our family in a nutshell. I describe myself as really competitive, but I try not to show it. I was a swimmer. I was a soccer player. So my goal was to touch the wall before you do. Or like when we had coffee, I was probably judging how fast you drank your coffee compared to me, and then how many refills I can get. So yeah, but again, thank you for having me.
Well, Thanks for making the time. And just, you mentioned when we had coffee. So I just want to put this out there for anyone listening. We met for the first time, had coffee, had a great conversation, a conversation that I think was very personal, like in terms of what you shared and what you helped me with. And then maybe a week after, you reached out and invited me to an event that I wasn't able to make it to. But what impressed me was your ability to and your desire to connect people, because you were trying to get, I think, like 6 or 7 people out to that event. You're known as a connector. I witnessed it firsthand. Can you give us some background, and I mean people listening and watching, in terms of why you connect people, how you connect people, and if I understand correctly, you're such a great connector that you've helped over 100 bankers get their jobs.
Yeah. Oh, thank you. It was a great cup of coffee. I think I spoke the entire time. I was probably on my 5th cup when I saw you at the point. But, over the years, when you do transactions, commercial and a lot of residential over the years, you just meet so many different people. I've done 18,000 mobile closings, which means you go to the customer's home. The hood of the car during COVID, all the physicians down at Barnes, I feel like I closed a lot of them. You just meet people. And I just love talking to people. I was raised in a family of Irish, German Catholic family, and my parents never met a stranger. And my kids think it's a little weird if I see someone with a Chiefs shirt on and I go up and say, "Hey, you're a Chiefs fan? Yeah, I'm from there. Are you?" And have that conversation. So, that's not work. I know title, you have to do what you do as a business, but I just like having conversations with other human beings. And I feel almost obligated when I hear someone say, "Hey, I need someone to develop this property. And I know 30 doctors that love commercial real estate investing. Why wouldn't I make that connection?" If I'm in a bank with leadership, whatever that is, and they say, "Hey, we need another business banker. I need a president of a branch, president of the entire bank." And I know hundreds of bankers because I tap dance for my food and I walk in and start talking over all these years. Why would I not connect my friend over here if he's a good person and has the right background with this bank or real estate firm or whatever the situation is? So I do like connecting people. I think being raised within my family and literally being the youngest of 4 boys, getting my food off the table before they did, being in just fortunately in a loving environment. My first job when I was 16 was in ICU. They don't allow children to do that. I say child now. They don't allow kids to do that anymore. So I was working in a very serious place when I was 16 years old, ordering the medications and lab tests and blood work that you don't want to have that test done because your life literally is in danger. So I was just around people that came to work, worked hard, drank a lot of coffee, and just took care of people in very serious situations. So, and then from there throughout Mizzou, I worked in and out of the largest vault in Kansas City through Boatman's Bank. That is now Bank of America at this point. So I was strapping bricks of cash, $4 to $5 million a day. So money comes in and you balance it with that company. So I did that, making $6.11 an hour, got a raise up to $6.23, and I was proud of that, and took care of people's business just in a different way. So I think maybe that's kind of where that came from. But yeah.
So the connecting, the caring, it kind of came through your upbringing.
Yeah.
Where did the interest in business, in real estate, in the world of title work, like where did that come from?
Yeah. Well, first off, nobody grows up wanting to be in the title business. I spoke to kids at Junior Achievement, probably in 2005. Boeing's there. I mean, they got fighter jet pamphlets and you've got doctors and you have all these people. And I had a very basic, this is our startup title company back in the day. And I just didn't even have any brochures. I had business cards. And I asked these kids that were from the farm, I said, "Does anyone know what a title company is?" And they said, "No." And they were very disinterested. I said, "Wouldn't it be fun to go to work and have coffee and meet cool people?" "Yeah." "What about going to lunch? Maybe golf?" And then half the people kind of perked up. I go, "That's what I do for a living." I said, "It's not easy. You have to get out there and put yourself out there." But I kind of then created the conversation of, I'm not trying to convince you to come into my industry, but you need to do research and maybe shadow and ask your parents, awesome friends, "What do you do?" Can I follow you around? Can I interview you in your kitchen? Just figure out what you want to do with your life. And I was kind of raised in that process to explore what you want to do. I didn't study finance. I didn't study real estate. My degree is in educational and counseling psychology. I was one credit away from minoring in German. I was all in to be a shrink, and then later took a right turn as I got older and ultimately got into the title business from banking. I was managing US Bank in Chesterfield, which is West St. Louis. I had all the Rams players and the Blues players, and that was kind of cool. Just seeing their faces coming to the branch, but that's where the money was, and that was in the neighborhood. So the conversation just kind of grew with some neighbors. They wanted to start a title company. I said, what are you talking about? And they said, well, we're going to start it. I go, well, I want to bank you because it's transactions, it's volume, and it's probably the best customer you can get at a bank is a title company just because of transactions, right? So went over to their house. We had some beers. They were my neighbors. We're over there quite a bit. And they said, why don't you come be part of this? I said, no, I'm good. I'm at the bank. Another time, hey, why don't you come over? No, I'm good at the bank. The sixth time I said, you got to stop talking about this. That's a big leap to go to a startup. Ultimately, we had the big conversation and then with my wife and said, can we do this? Can I take the jump? And then I got in there and turned the crank. I would go out on the street and meet clients, developers, real estate agents, loan officers, mortgage, whatever, whoever was doing transactions. And then it just grew and grew. And we were just doing local business, which the typical small title company, which does great work, it does 1, 2, 3, 4, 5 counties. And then we were able to go statewide because I thought, well, if I was US Bank, I could take your deposits across the street or in Jeff City or in Kansas City. I'm in the state. Why wouldn't we do that as a business? So then we went statewide.
So how big was the title company when you joined? And then how big was it at that point when you went statewide?
There was 4 people when I joined. 2 of them were silent. One was a big commercial attorney living out of state, funding the business along with the other. And he was kind of in the boardroom, kind of a job. And then 1 or 2 or 3 of us were in there just turning the crank. You get your volume up, you can cash flow, bringing someone in to do the research or the title search. And then I could go on the street and then do more business. And it just naturally feeds on itself. So the challenge then is cash flow for those small businesses. How do you take Christmas off? Like, how do you take your holiday, whatever you celebrate? In December, we get busy in the title industry. Everyone's like, oh, you taking time off? No, I'm in title. We're doing closings. Bankers want to get paid. You want to close by the end of the end of the year. Commercial always wants to close by the end of Q4. So how do you take time off? That's the difficult when you're a small agency. The hardworking people, and there's lots of great title companies. I was in a strip mall called Title Row. There were 5 or 6 of us, including an underwriter that underwrote all of us and then would compete against us. That was a little bit of a challenge. So I enjoyed doing that. Ultimately, I went to a larger shop, a boutique shop, and then where I'm at now doing small, medium, and large deals. So it's been interesting. It's a tough business, but it's addictive because when you can win, you can win. Yeah.
If we can just back up briefly, can you explain what exactly a title company does and then how one title company can differentiate itself from another and not just be viewed as a commodity, if that makes sense?
Yeah. So kind of the basics for title is even some of my friends that aren't in the business, I explained to them the Title 101 speech. Title companies are insurance agencies. You're either small, you're medium, you're large, or you're gigantic. I have been all 4 of them, right? So you have to wave a flag, as I call it, an underwriter, right? So if you're a property and casualty person, you work for a State Farm, American Family, AIG, that kind of company, you're writing insurance for a future risk. Am I going to get hurt on the job? Or are my people going to get hurt on the job? Am I going to die? That's life insurance. Auto insurance, the risk that my kid, knock on wood, gets in a car wreck. Title insurance is the absolute opposite of that. So a title company does their research going back in time, X number of years, depending on the state and the county. And then we make sure there's no back taxes, there's no liens, and there's no judgments. So if I kind of break that down, if there's no back taxes, okay, maybe you owe taxes to the city, to the state, or I hope not to the IRS, right? When you get a lien on your property, that means you got in a fight with the roofer, and in the form of a lawsuit, they put a lien on your property. So when we do the research, by doing the research on your house, and if you have got a lien on there, that means you cannot refinance your house, you cannot sell your house. And no way do I want to buy your house with that lien on title, because it's an unpaid bill, is what it is. It's a bar tab that's open that you have to pay. So, and then a judgment comes from a judge, someone in a black robe, and it's maybe your plumbing company went out of business. Maybe your wife had a plumbing company and it goes out of business. And then they're putting a lien on your property that you owe all those contractors and vendors and relationships a whole lot of money, sometimes worth more than your house is. So we do the simplest form is we do a background check on your property. We wrap an insurance policy around it and we sell it to two people. One to the homeowner or the business owner or the entity, right? So if you buy a home for $500,000 or a building for $500,000, that's the owner's policy. You have that policy in case someone knocks on your door and says, hey, my sister was on this house too. She didn't sign, my brother committed fraud, or any other number of things that could happen. And you keep that owner's policy until the day you sell your house. The day you sell your house, in theory, you put it in the shredder because there's no value to it. Now, then you get a lender's policy, so the second policy, which protects the bank. We'll just say U.S. Bank, for example, right? U.S. Bank wants to know that their investment with you, because you don't own your house till you pay it off. Everybody thinks, oh, I own a house. I don't say that at closing because I'm celebrating with them or their business. But the lender's policy protects the bank, puts them in first lien position. At the end of the day, if they have to foreclose on you and you just disappear on them, whatever combination it may be, that they're protected, right? And they want to know back taxes, liens, judgment, that kind of stuff too. So really you get two policies. And because you're buying insurance, even though it's the nerdiest insurance in the world, you have the legal right to choose whatever title company you want or insurance agency. Just like the bank on your mortgage or your commercial loan cannot force you to use any title company or any insurance company that they may have an affiliation with. So some banks own property and casualty companies. As a result of getting the loan, they cannot force you to buy the homeowner's insurance or commercial insurance. No different than title. So there's nothing wrong with an agent, developer, or broker kind of saying, oh, you should close over here. And you should use this loan officer, this mortgage person, or this commercial lender. It's a value add as long as they're good. But they legally cannot tell you that. Interesting thing is, 50 times a year I hear the opposite from very successful people. It's not legal. So because of that, you have the choice because there can be price variations. So that's what a title company does. The other aspect of what we do is called construction disbursing. That's if the Joneses buy a piece of land and they want to build a $500,000 house, or you buy the land and you build a surgery center, right? So locally where I live in St. Louis, I do a lot of my own inspections up until now. So for example, there's a surgery center in St. Louis, not far from Busch Stadium. So I would go in there on day one, and it was just a wreck of a building. It's brick, concrete. I park behind the dumpster to get out of there as fast as I can. Interesting crowd. And I take pictures. And we do that every 30 days for the most part for construction draw. So we are there to protect the bank, their money, which is the investor also. So the Joneses that own it or the physicians that own the business, right? Then you've got your general contractor. And we work with the general contractor and all their subs. And every 30 days, those guys, it's payday. They want to get paid. They want to get paid for the materials. So all the windows, the floor, whatever's being built that month. So our job is to get the invoices from them. We get the lien waiver, which means you're getting paid. You can't sue the property. Okay. And then we protect the money. So we ask the GC, were the floors put in? Yes. But Bob put in the wrong darn floors. He put in wood. It should have been carpet, whatever that is. Once that dispute's finalized, then that guy gets paid. So it's just backwards accounting. We're going to hold that $500,000, the million, $30 million, whatever that is. It's just backwards accounting. Lien waiver invoice, pay you. Lien waiver invoice, pay you. All the way down. Most projects go over budget, just so you know, like that I've seen. So that's why I've always been scared to build a house.
Sure.
Because I don't want to have that in my life. So that's what title is. That's what construction dispersing is. My role for my clients is to quarterback that. So if I have a developer in St. Louis and they only do business in St. Louis, love to quarterback some or all of your business locally. Oh, but you do some in Chicago. Do you know a title company there? You're probably going to Google, well, I could do Chicago. Oh, your company's also expanded into Kansas City and Colorado and Miami. You're building coffee shops, Chick-fil-A's, car washes, multifamily, or hotels. So those are good opportunities for me, or people. I can be your local guy, I can be your regional guy, or your national guy. Even if I sit second chair in some of that, it's usually good for business.
Your role, like if someone is acquiring or selling a business, your role is if they're also acquiring or selling a piece of real estate along with that business. Is that correct?
Absolutely. That's pretty unique that we do that. My SBA lenders love that. And SBA lenders are small business lenders, or they do loans to the Small Business Association. Although it's a lot more paperwork, it's a way that our government helps subsidize the American small business person, right? So the order comes over to me in the form of a contract, and it could be, so American real estate is this: a $300,000 plumbing company is selling, okay? When I look at the contract, I do get excited when they own the building too. So if it's just the asset purchase agreement that comes over, the asset sale, if somebody comes and buys that plumbing company, we're going to hold the earnest money, hold the contracts. We're going to work with typically an independent attorney on the buyer side, the seller side, business broker on the buy side and the seller side. And the buyer's getting the loan, not the seller. So that SBA lender friend is mine. I like to know everybody in the room, but I usually get the deal through the banker. And that helps because I'm a banker on the other side of the fence, on the title side, which nobody knows what title is, even though it's on the podcast, right? So we handle that type of transaction. Usually you're going to see 300,000, about 6-7 million. So we just closed a $6 million hair salon in Miami. International guy, so that's good for me. He's got multifamily all over the place. So we help pay out the commissions. We're going to fund, we're going to disperse. And I've been told just straight up by some of my business brokers, you just keep my commission safe, which is fine for me, right? So we're that neutral third party on the escrow side. And if they are buying the building or the land or whatever it is, then we put on our title hats. We have two hats. So that's what a business acquisition is when you acquire a company. So sometimes they're 300 million ground up solar farm. Sometimes it's $50,000 barn around the corner. So for me, singles and doubles win the game. If you're a baseball fan at all, my son's a baseball player. So singles and doubles, but we can handle the triples and grand slams. It's hard to hunt just grand slams. That's very difficult, even kind of with our platform. So my SBA guys and ladies are hitting singles and doubles all day. And then they've got a friend who's a mortgage person that I'll get a refi, and their sister-in-law is a real estate agent down the street. So we can work with a little bit of everybody.
On the real estate side, you're also following the same model in terms of doing singles and doubles and grand slams. Like you're doing smaller projects, really large projects. What's the range there? Like how small can you go? How big can you go?
So there's really no limit. On our residential side at ATA, we have 38 salespeople. And I think I think 37 of the 38 have stayed over 10 years. We just kind of don't lose people. Everyone's taken care of, which is nice. It's refreshing. You know, sometimes I had the president of a bank. If you're in St. Louis, you know this person. He's funny. And he had switched banks. And he said, Brian, I'm going to use you now. We had a relationship with someone else. And I said, I know that routine. I know that title company, and I know that banker. And I said, well, just send me what you have. So we went out for Starbucks, right? We had a coffee, and I said, well, tell me about your portfolio. And he goes, I'm all commercial. I do small deals and then really big deals. So I leave coffee going, yay, nice guy, good business, and it's clean business. And then he sends me a deal 2 weeks later, but he calls me. He says, Brian, I got a deal for you, but I'm embarrassed. I said, what are you talking about? He said, it's $40,000 second mortgage on my client's home, but it is my best business customer. And I started laughing. I said, are you kidding me? Send it over. I'll take care of it. I mean, there's almost no profit in something like that. But we're doing that from a relationship standpoint. And a lot of business people, oh, relationship. You know what? Sometimes, if a baseball analogy, sometimes you got to wear it. You got to get hit with the ball or do a bunt. But bunts get you singles get you doubles, triple. And then the big one we've got, it's a ground up world class hotel chain. And it's so it's got the construction dispersing, but it's $800 million. And our heart, yeah, we get excited, but our heart's not going to skip a beat because we've got the economies of scale to take that on. So local title company, awesome, medium, great, large, great. It just depends on what you need. For us, I look at it like I like talking about food. If you and I own a small restaurant, right? And 2 school buses pull up and your staff can handle that. The owner gets excited because of money. The workers, that's a lot of work. I'm going to be home late. You pull up 3, 4 school buses. Now everybody's mad and crying. That's the downside of when you don't have the economies of scale in your business to help you. You bring a bunch of school buses. That's where a company like us can really separate because 450 people. So a lot of that's residential. A lot of it's commercial. Everything is based out of Farmington Hills, which is the suburbs of Detroit. It's beautiful. And then we've got commercial offices there, Chicago, Indy, Columbus, Ohio, and then I'm physically open in St. Louis, and then we'll probably maybe buy someone in Kansas City. So we've acquired 15 other title companies. Acquisition is the way to go these days. And then you have the staff and the expertise, and then we bring in 6 to 8 underwriters, and 10 in-house attorneys, commercial and residential. So literally text the guy I report to, John, who's great, his general counsel, on a very large, I mean, ridiculously large home in Florida. And I had a legal question and quick response. So that makes it fun for me. But again, relationships are where things are at. Doesn't mean the business is easy. A lot of the banks that I work with are developers. They know me, but they don't always work with me. You know, you can't work with everybody every single day. Otherwise, you would just retire in 2 years and doing deals. So, yeah. So that's kind of how what title companies are, what construction dispersing is, and then kind of the size and scope. But yeah, doubles are great. Doubles are 500,000 up to $1 million all day long. Homes, buildings. Yeah, it's great.
Why is acquisition the way to go for growth?
Sometimes titles like being in middle school. I had the CEO of a real estate firm. We're going to help handle their commercial. They're probably the largest seller of land in the United States. So I'm a little bit excited. And that all went down in my hometown of Kansas City last week. So I was excited about that. Part of helping people on the title side and growing, it's very hand to mouth. It's almost like a street fight or middle school. Well, I went to school with you and this title company, she brought me bagels and she's nicer than Brian, or whatever the combination is. It's just more difficult and the margins are skinnier. So if you can acquire a business that's already established, and I wouldn't look at anybody that's been in business probably less than 15 years because they haven't been through the cycles. Early 2000s, brutal. 2008, insanely painful. And then there's probably been 2 cents. And then if you take like a small title company, even a large one, during the pandemic, which feels like a blur, by the way, it was incredible for our industry. Rates went to nothing. Everyone and their brother and their sister, there's probably not one building in this town right here that didn't refinance to all-time lows. It was just something that we'll probably never see in our lifetime again, I hope. So when that happens, you just got to be able to handle the volume. And that's painful. But those companies, if you haven't then seen the after effects, I kind of described COVID. If you drink bourbon for 3 years straight, you're going to have a hangover, right? People drank so long and had it so good that it dried up and it was dry forever. I think on the mortgage side, the loan officers, multiple friends that run offices, I think 60%, don't quote me on that one, 60%, at least in the region, are out of the business. They're not just low on volume. 60% of the people quit If you looked at that, like my mom was a nurse for 60 years. If you looked at a hospital and you're really, really busy for a couple of years, and then all of a sudden you didn't have the patients, someone's going to get fired, someone's going to get downsized. But if 60% of the nurses just are forced to leave or have to leave or want to leave, that's insane. But then you get the highs back, and then that's where us title people and development people, but you can't get big chested in it. It's an extremely humbling business. The highs are great, the lows are just brutal. You can't go buy a bigger house. You pay cash for your car. I mean, you pay things off. You save more than you did it during other times. And then appreciate that I used to call it back in '04, the fax machine can stop. Some days you get 15 faxes. That's how we just take orders. And some days you go in there and I'm like, hey everyone, do we get any orders today? And then I have to run out and try to get more business. So interest rates are very humbling. The industry is very humbling. So to answer the original question of, do you acquire? Why would you acquire? You have to acquire someone who's been in business and has a deep bench of people. And then I'm going after the commercial offices. There's just less of us that specialize in doing so. So then the cycle of acquiring them takes a little bit longer. So I've got some friends we're talking to. Yeah.
Makes sense. And you mentioned interest rates. So do you have any thoughts or predictions on where we're going with interest rates? And then also, what's transaction volume look like today, and then also maybe 6-12 months from now?
Yeah. Great question on the rates. Just straight up, if someone says they know, they're lying to you. Nobody really knows. But the consensus in my friend group, which range from all the mortgage guys to the commercial lenders, to the business bankers, the SBA folks, to people that work for the government, to people, a president of a medium-sized bank, right? We're just assuming a quarter point dip on the next go around. After that, another quarter point dip. I think with politics, there's a lot of stuff going on, and it's hard from an investment standpoint to look long term. And when we're stable long term, that's probably better for us. So I'm thinking half a point by Christmas time. I think anything down is positive because it makes my wife, my friends go, hey, I heard rates went down. That's a positive thing because now they're more likely to buy. They're more likely to, get something bigger or get a rental home or get a condo at the lake or in Florida, wherever it is. So, and then volume wise, I think on the title side, it depends on what pond you fish in. The typical smaller agency like I was prior, a lot of folks are going to focus on residential. And if you only were chasing that refi train, there has to be what they call a triggering event to refinance. Typically it's a divorce, because when you get divorced, you got to sell your house unless one spouse can afford to pay for the whole thing and live in this big house, right? So if you're just chasing residential and refi, you might not even be in business anymore. Purchases, a lot of times there's joint ventures. So St. Louis is known for it more than a lot of other cities that we do business in. Title company joins forces and makes a legal entity. It's supposed to be legal, called a joint venture, and then they can revenue share one way or another and then capture business. And it's all about that capture rate, 40, 50, 60. So basically the agents have to like the title people. Then they have to do good work. The question is, are you charging more to offset that level of service? So that's a big thing that we compete against. So there might be 5 big real estate firms in the region. Well, why would you go market to them if they're already married? I mean, you're looking for someone that you can do business with. Volume-wise, different sectors. We saw in the last couple of years a lot in storage. It could be an outdoor RV park. I did a really large one last couple of years. A lot of the typical storage where, somebody's putting their old couch and everything else in there. We're seeing that still be good. Some of those are national chains. I'm chasing more some restaurant chains, and I'm focusing more on the hotel space. The air is a little thinner up there. There's less people doing it. First of all, they're not commercial, let alone have the knowledge or background to do it. So that's becoming, I keep getting coached from some other friends of focus, specialize as much as you can. And so that's That's kind of what I see in the market. But next week, it could be totally different. That's the crazy thing about real estate and banking and all that. So I think if you just kind of keep your head above water and you just work and work and work, good things eventually happen. Yeah.
Sure. I appreciate you sharing that. So if we were talking about the $800 million hotel development or an $8 million self-storage facility
Yeah.
or an $800,000 restaurant, are there different inclusions or different additions to policies based on the size or how complicated a project is? Like how varied can title work get when it
Yeah.
comes when it goes project to project?
Yeah. Great question, by the way. So it's going to depend on the state, what underwriters you are licensed with in that state. The reason why we have 6, 7, 8 underwriters is options. So on a construction deal in state X or a certain size, there's certain underwriters where you go, great, like the people, this needs to come over here, right? For example, not many people do cannabis transactions. When you cannot use cash to get a loan or get a loan to build this building, to do anything with cannabis. You just can't. But I can do the title work because I use this one particular underwriter. The others, I would say, have a stock price, and that's kind of a social thing of why they choose not to. Construction, new construction, whether it's that $800,000 restaurant or $8 million restaurant, whatever it is, we've got a niche. And then our organization knows the C-suite within those groups. So if it gets really large, it's called over the limit. So you have to get over the limit approval. So, house over $100 million, we're going to use a specific underwriter and get certain approvals for that. And there's some nuances within every state. Florida's a little different. Illinois and the Carolinas are attorney states. So we know how to kind of work on those files a little differently. It is not a cookie cutter industry. It just isn't. It can become cookie cutter when you do different deals within the same state, because that feels cookie cutter. But when you're doing multiple states, even though it's the same size building, even the same brand of restaurant, it's just different. But one of the challenges when you get into larger deals, from my side on the business development side, is earning the business. The higher you go up, you're talking to attorneys. You're talking to the developers. And these are folks that have some stroke and opinions, and they're successful, and they're in the newspaper, they're on television. But it's usually, if you get in with their CPA or their attorneys, they're the ones that know our escrow team. And it's just another file. But it's not a $50 million hotel. It's a really big hotel. Or something unique like a $300 million solar farm. Who does $300 million solar farm? Well, we can. But we probably did 20 transactions for this law firm, or sometimes another title company will send us deals. They don't do the same state. They don't do that size and scope. It makes them nervous, or they don't have the right underwriter for it. So internally within the industry, I have a lot of friends at other title companies, and it's called a work share agreement. They send us over the deal, and I promise not to go after their customers. So it's kind of simple that way, but it's pretty nuanced, kind of like property and casualty. I was at a cigar bar, got introduced to some friends yesterday, and turns out I have 14 referrals for them. It's kind of fun because they're working on projects like I am. So we got all excited, and we stayed an extra couple hours and just talking and talking. And on my phone, I just kept taking notes like, you need to know this attorney, this guy, because not just to rub elbows and feel good about yourself, but to actually do deals. So you kind of network in a little different way. It's a little more detailed, confidential conversation. So a lot of times we'll have NDAs or non-disclosures. I actually respect those and honor those. So even if I'm networking and I'm excited and very caffeinated and having a cigar, whatever, I got to tone down of I can't even tell you what state we're talking about. So, but the referral partners really come from the developers and the attorneys and just when there's more zeros. Yeah, and it's fun.
Got it. So I know you're on the business development side, but have you ever come across a scenario where someone on your team explains like a very weird thing that popped up in during their underwriting or during their
Mhm.
research. Because like what on the transactions we do, we haven't seen anything overly odd, but sometimes we'll see like 100-year-old easement that doesn't make any sense. Do you have any stories like that
Yeah.
kind of pop out?
Yeah. Well, for starters, they're really boring stories, but absolutely. And freakishly, it's every day. You know, I've told this story dozens of times over the years. You would think title is title. It's pretty black and white. You do the research, which I describe it like to the kids. I'm like, hey, it's a photograph of public information. I didn't cause it. I didn't put the liens. I didn't put your judgments. That's not my. It wasn't my party, right? And then we're going to insure it. But if it's there, we're going to help work through it. The number one thing through the years has been old, unreleased mortgage liens. Everyone has a lien on their house if they have a mortgage. I would say it's a positive lien, right? So if you buy a $300,000 house, $200,000 loan from the bank, they put a $200,000 lien on it, right? So if you refinance it with the same bank or a different bank, you're going to see that on what's called the title commitment or the research, right? So that's the number one thing. A lot of times there's old loans, the old bank, the old bank, the old bank, the old bank from all the little refi runs that we've had over the years. I bet we kind of had this stat. Probably 30% of people had bad liens on their homes. So although the old loan was paid off from the new bank, it was still there. So again, back to food and my enjoyment of food and drink stuff. It's like you paid the bartender, but the bartender did not document it. And that's all in the title commitment. Well, we have to fix it. It's inefficient. We don't want to have to do that because it's time and labor and it's not fun. And we want to turn in our homework to you quicker. Um, Sometimes environmental things get a little weird. And then then they have environmental surveys. Taking on a gas station is tough, more for the bank side than us. Our world's really black and white. What's on title? We're going to show it to you. And if there's bad stuff on there, we're going to help get rid of those skeletons as long as it's legal and we can underwrite it. So, but yeah, on the commercial side, you see a lot of different things. But we have a huge escrow team, and then we have other teams that help on the research. That's where I go, I know where the library is. I don't know everything in every book. Yeah, my job is to put you in the library.
You
Yeah.
let the experts
Yeah, absolutely.
really focus on what they're focused
Absolutely.
on. Makes sense.
You gotta know your lane. You gotta
Sure.
know what you're okay at.
Yeah, that makes a lot of sense
Yeah.
to me. The construction dispersing side, do you know of any stories where I just would imagine there's been situations where maybe the general contractor is forging lien waivers or doing something along those lines, and you
Mhm.
guys found out and you protected the bank and the investors. Do you have any stories like that come to mind? Challenges that you guys overcame?
Yeah. Well, for starters, in general, the purpose for having a third party construction dispersing firm is to prevent or reduce the risk of fraud. Okay. You might like the GC, you got to turn in your homework, right? Then we're going to pay your people. So there can be a lot of fraud or abuse in the system. I've got a project right now we're considering. Customer has nice assets, starts building with cash, decides halfway through he wants $1 million loan to finish it. Okay, I need the lien waivers, I need the invoices, I need all of these things because we need to insure it, right? We need to protect the bank, protect ourselves, protect you as the owner of the house, right? And then protect the GC so no one's showing up in the newspaper. The biggest risk right now, it's wire fraud. Wire fraud and just fraud mainly from the consumer to us is absolutely insane. People try the whole phishing thing. I think my emails, and I'm on the business development side, I'm not in escrow, probably 3 a day. I get emails from my underwriter or what appears to be my underwriter. It's got their logo. They want you to click on this link. So we have an in-house, I think we have 5 or 6 people in IT. So if I see an email I'm just not sure about, I click this little fish hook. I know a lot of the banks and other folks have it. And if they bless it, they put it off site and then they bring it back, then no, it's a real email. A lot of those come over as fake title orders. It's from a bank that we use, which most title companies will use 1 or 2 of these banks. So we kind of red flag those. If I open it up now, I'm clicking on an attachment. But I thought I had one the other day, and it's one of my old clients, mortgage guy. Actually, it's on his personal home. So I was able to scroll through, and I knew it was him. So, because he had called me the day before. Wire fraud, it's absolutely out of control. We will absolutely, unequivocally never forward you an email with our wiring instructions for you to give to your customer. And here's why. Electronic whiteout is the best way to describe it. So if somebody's sitting in your system and you're the weak link, or usually the customer is the weak link, they're going to just twist, hey, the title company, this is kind of the cliche. Hey, from the agent or developer to the customer, hey, the wiring instructions have changed. They just wanted to update it. Now it's probably going to Bank of America in DC, and then it's going out of the country. And you're out of luck. Can't control it. So what we do, we've got a lot of bank accounts, a lot of different banks, because we're in a lot of different states. So an order comes to us, and I go, give me 48 hours. The team will set up the file, and you're going to get a couple things. 4 hours later, you're going to get the order confirmation, and then secure wiring instructions, and usually an escrow agreement if there's earnest money, right? Commercial or residential. So when you open that up, it's going to tell you what bank and bank number to go on to within the website. So our website's secure. It's expensive to do that. So a benefit of being larger. You click on that link, you get it, then you go to your bank, you go, I'm wiring funds because I'm buying a business, I'm buying a building, I'm buying whatever, right? And that's nerve-wracking. I remember when Heather and I had sold a home. It was through my old bank that I managed in my own title office, and I was still nervous because I know what goes on in the world. It's really scary. It's really sad. The last one is a business acquisition with real estate. The higher you go up, you get more international investors or clients. So that's a natural red flag, anyways. But affluent people do business in the United States. So how did they handle that? They sent in a check. Ultimately, oh, we're not going to do the deal. We're not, we decided to go somewhere else. And then just go ahead and wire the funds back. So I email Pam and escrow, and I go, Pam, this kind of red flag. She goes, I knew it on day one. There was something else in the file. I've known about this. So we protected ourselves. I mean, we've protected ourselves from some really big hits. But the larger you are, the more likely that someone's going to try to come after you. So I would say if you wire funds, verify the funds, the routing and the account number, not just verbally, because you can fake some of those. You can do some crazy AI stuff now too. And face to face with your banker and wire the funds. And do not call a number on the email that comes to you. Google that title company's headquarters and ask for the right person on your transaction. So it's sad. I had a banker tell me last week they were used another title company. And fast forward a little bit, older lady lost her money, and when he saw her, she was on the floor just crying. She lost 120,000, and in theory, it's her fault, but it's not her fault. People just took advantage of her, and she was trusting of everybody, and everybody was legitimate in the transaction, but somebody was on her in her email. So
It's horrible.
Yeah, it's horrible. It is horrible. It's ridiculous, and I don't know if it's just. I feel like it's just going to get worse. So we just try to protect ourselves and educate friends and family and, just preach it. My email signature line, my IT people automatically update it, whether it's a holiday or we're going to be closed for New Year's or whatever it is. And I noticed this morning it's about wire fraud. And we will absolutely, not the right term, but you will never receive wire instructions from us via email. I just think to myself philosophically, that's really sad. Some people just need to get a job. So, but yeah, so there's a lot of fraud in the business, but 99.9%, it's all positive. It's excitement, champagne at closing sometimes, or tears when an older couple sells their home or she sells the home and he's in a home and, it's just life. You get to see the first time home buyer or the first business that somebody buys, a machine shop. That's really exciting. So it's fun. I know it's just paperwork to a lot of people, but it's life and it's important.
That's awesome. I think I need to get better at celebrating at title companies are at closing. 'Cause, for me, that's when the work starts. So I really don't. But you're right. It's life.
Yeah.
These are milestones, very
Yeah.
important milestones, and you guys get to be a part of it. That's
Yeah,
pretty awesome.
we do.
We like to end each show with what we call a hole in one, which is just your greatest piece of advice that you can
Love
share that someone listening or watching can implement in their life or business
Yeah.
relatively immediately.
Yeah.
Do you have anything you can share?
Yeah. For starters, do I get a mulligan if it's a hole in one? Do I get that? You know, my enjoyment throughout the day, or my main focus, although yes, I have my role in what I got to do and I need to bring in business and do deals. I feel that if I focus on consistently, aggressively connecting friends, family, that just good things happen, because everyone knows somebody in real estate. You walk out of this building, there's a house, there's a building. Someone knows a mortgage person, a broker, a developer, somebody knows somebody. So I think if you kind of just focus on being a good person, as cliche as that is, good things are going to come to you. One of my phrases that I just tell myself is, nice people get nice things. So if you're nice, and I hear that you got downsized at your bank because they no longer do SBA, and my buddies over here are like, Brian, tell me when you got a good guy or good girl, good lady to come over. If you're nice, I'm going to think about you, and it will naturally become reciprocal. So if you're always trying to build people up, it's going to come back in spades. I was lucky enough to coach soccer for a long time. My son was part of it. My nephew was part of that before, but I've coached 24 boys soccer teams. And half the fun is me being on the sidelines. I'm playing, they don't realize it, but I'm on the field with them, being a boy with them and just enjoying life. Those parents, I participated in their lives. Some of them like, well, why wouldn't I just start using you? Okay. And then I laugh like, well, that's, you got to put yourself out there. So I've done like Chesterfield Chamber of Commerce, fundraisers for the school, the golf committee for the kids' schools, stuff like that. I think you just have to put yourself out there so that you know enough people. So when you're out meeting other people, then you have people to connect them to. If you don't have X and Y, then you can't put them together. So that's kind of my focus, is just I'm a big believer in karma, as corny as that is. Good things come back to you. I'll get an email after a text after a year going, we had coffee a year ago. I finally got a deal for you. Because not really in the industry, but there's somebody who's kind of influential. And I got a friend you got to meet. They got this deal. And then all of a sudden you have a deal. It's better than just begging for business all day. And I don't, so hopefully that helps. What's your hole in one?
Honestly,
Come on.
I'd have to go back and think about what I'd want to share there, because I've shared a couple over the last couple of years that we've been doing this. A wise man once told me, nice people get nice things.
Thanks, Phil.
And that's my hole in one.
That's great. That's great.
I don't remember who it was, but it was a smart guy.
Yeah, that's funny. That's great.
But Brian, I really enjoyed it. Thanks a lot.
Yeah.
You provided a lot of great value. And where can people learn more about you or ATA if they're inclined to do so?
Yeah, easiest thing is probably just hit me on LinkedIn. If you just pull up my name, the last name is Thies. Nobody ever says it right, by the way. It's like peace with a T on the front. Just ignore the H and some other letters. But it's Brian with an I, and then Thies, Thies. And then we're ATA National Title Group. So yeah, just reach out, hit me up, just say hello. Or if you need something, you got a friend looking for a job, or you need kind of an idea in business or book recommendation, or just anything, or just say hi. I love being on LinkedIn. It's fun. It's a very positive and neutral, non-political, business-focused thing. And it's been an interesting journey. But thank you for having me on.
Yeah,
I really appreciate it.
My
It was
pleasure.
fun.
And we'll be sure to add both of those links in the notes for the show. So
Okay.
the links will be there.
Okay, perfect.